Hello, everyone. Today, we'll break down the US market, look at a few instruments, and highlight the key points that I hope will help you make informed trading decisions. And we'll start today with Nasdaq. On the monthly chart, the correction of the previous growth is continuing. I assumed it would be deeper, but at the moment, the asset has made an attempt to grow. So far, everything is within normal limits, and this growth is not supported by volume. That is, there is no interested party in this movement yet, so I will continue to expect the asset price to decline. Let me remind you that I am expecting a correction to the range of around $23,500. A revision of expectations is possible only after the price breaks out and consolidates above the local high. Now let's move on to the daily chart. Despite the fact that the price practically matched my expectations for the move with a target of $32,000 and return to the sideways range, I do not observe any volume in this movement. Therefore, I cannot assume further price growth. Yes, buyers might become active in the near future and continue to push the price up, but for now they're absent, and I think that going forward the price will systematically decline to the designated level. Therefore, for those holding stocks in their portfolio, the current price increase is not confirmed by volume, so I consider a continued decline in the asset's price to be the priority direction. It is advisable for buyers to purchase more shares only after the price breaks above $31,000 or upon the completion of the expected correction in the $24,000 range. Next, Tesla shares. On the monthly chart, in the previous review, I assumed that this downward movement looked more like a liquidity sweep, after which I would expect a resumption of growth, which is exactly what happened. But so far, the growth has only lasted until the test of the broken level, and there's little buying in this movement. The overall sentiment of the stock points to future growth. But let's move to the daily chart and take a more detailed look at the situation. To start, let's identify the local trend. Now, the recent movements are clearer to us. Accordingly, further growth of the asset is possible only after the current local trend is broken. Locally, growth is still possible, but only to fill the previous price gap. Therefore, for those holding the stock, the most pessimistic scenario is a continued decline of the asset to the lower boundary of the global uptrend. Buy-in or add into your position in the stock at this moment makes no sense. Next, Nvidia stock in its monthly chart. The trends and levels remain relevant. I don't see any major changes on the chart. The price continues to remain within an uptrend and a sideways movement. I previously said that I expect the correction to continue to the range of $160 to $170 per share. The invalidation to this expectation would be breaking through the local high and the price consolidating above it. Now let's look at the daily chart. The price has broken through the local downtrend. Buy-in volumes in this move are quite good, but they don't look like the volumes of a continued global uptrend. As I said earlier, if the price breaks above the local high, only then can we count on further growth up to $300 per share. For now, it looks more like a continuation of the global sideways movement, in which a price return to test the upper boundary of the broken trend and to fill the price gap is still possible. Therefore, for those holding the stock in their portfolio, the overall sentiment for the asset at the moment is bearish. Buying more shares will only be possible after confirmation of buyer strength, that is, after the price breaks above the local high. Next is the AMD stock in its monthly chart. The price continues to move within the correction of the previous growth. I consider the price range of $380 per share to be the target of this correction, but this is the nearest of the possible targets. It is in this range that we will observe the efforts of the players and make further decisions. If buyer efforts do not appear at this level, the price could continue to be pushed down to the $330 range. Now let's look at the daily chart. After breaking out of the sideways movement, the price formed a local downtrend, which confirms my suspicions about the continued decline. The volumes also speak to the strength of the selling. Buying is currently exhausted. Based on this information, I will repeat that a move to the $350 range is a very realistic scenario, at the very least to fill the historical gap. I will keep my chart expectations in place. Therefore, for those holding the stock in their portfolio, as long as the asset is in a downtrend, it will remain at a loss. I think that after filling the historical price gap, the asset will continue its growth. Buy in or add into your position in the stock at the moment makes no sense. The best moment would be to wait for the correction to end that the levels previously indicated. Well, that's roughly the development of events I'm anticipating, and if you think otherwise, write to me about it in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope I was very helpful. And don't forget, we propose, but the market disposes.